Welcome back to Factful Finance, the place where we transform complex financial topics into easy-to-understand insights that make a real difference in your financial journey. Did you know that after major natural disasters, mortgage forbearance can be a lifeline for homeowners struggling to make payments? But many people don't know if they're eligible or how to apply for it. Today, we're going to dive deep into mortgage forbearance after natural disasters, breaking down eligibility, tips, and the key steps you need to take to protect your home. Before we dive in, a quick disclaimer. This video is for educational purposes only. Listings of apps or products don't imply endorsement, and it's always a good idea to consult with a professional to get guidance tailored to your situation. Now, let's get started. When a natural disaster strikes, whether it's a hurricane, wildfire, or major flooding, the last thing you want to worry about is your mortgage. But there is good news. The government and most lenders have provisions to help homeowners during these tough times. Let's break it down. Step 1. Understanding mortgage forbearance. Mortgage forbearance is a temporary suspension or reduction of mortgage payments. It's not loan forgiveness, it's a pause. Forbearance gives homeowners some breathing room when they're facing financial hardship due to circumstances beyond their control, like a natural disaster. This can help avoid foreclosure while you get back on your feet. For example, take Noah, a homeowner in Florida. After Hurricane Ian, he couldn't work for weeks due to the damage to his business. His mortgage lender offered him forbearance, allowing him to skip payments for 3 months without any penalties. This gave him the time he needed to recover financially. Step 2. Eligibility for forbearance. If you're wondering whether you qualify for mortgage forbearance after a disaster, the short answer is, you probably do, but you need to act quickly. Most lenders will offer forbearance automatically when a disaster is declared in your area. Here's who typically qualifies. Homeowners in disaster-declared areas. If a natural disaster has been officially declared by FEMA, Federal Emergency Management Agency, in your area, your lender may offer you forbearance. Those directly affected. If you can show that your home or your ability to work has been impacted by the disaster, you'll likely be eligible. Federal loans. If you have a loan backed by the government, FHA, VA, or USDA, you can almost certainly qualify for forbearance under disaster-related provisions. Let's say Emma, who lives in California, was impacted by the recent wildfires. She lost access to her job due to evacuation orders, and her home was damaged. With her loan being backed by the FHA, Emma could apply for forbearance, potentially deferring payments for up to a year. Step 3. The application process. The application process can vary depending on your lender, but in general, here's what you need to do. 1. Contact your lender. Let them know you've been impacted by a natural disaster and request forbearance. Many lenders make this process easy by providing a dedicated hotline or online portal for disaster relief. 2. Provide documentation. Be prepared to submit documents that show the disaster's impact, such as evacuation orders, insurance claims, or proof of income loss. 3. Review the terms. Understand the forbearance terms, whether payments are postponed or reduced, and when repayment will begin. For example, Liam in Texas was impacted by flooding last year. His lender offered a 3-month forbearance period, but the repayment terms required him to pay back the missed payments in installments over the following 12 months. Knowing the terms up front allowed him to plan financially. Step 4. Key tips for managing forbearance. Now that you know how to get forbearance, here are some crucial tips to help you manage the situation. Communicate with your lender. Don't wait until the forbearance period ends to reach out. Keep the lines of communication open to avoid misunderstandings. Stay organized. Keep track of your forbearance dates and any related paperwork. Knowing when payments are due and what your repayment plan is can save you a lot of stress. Explore disaster relief programs. In addition to mortgage forbearance, you might be eligible for other financial relief programs. FEMA often provides assistance for home repairs or temporary housing costs. Plan for the future. Once the forbearance period ends, start budgeting for how you'll catch up on any missed payments. Some lenders offer deferred repayment, where you pay the missed amounts later without penalties, but it's best to be prepared. Step 5. What happens after forbearance ends? When the forbearance period concludes, you'll be expected to resume full payments. However, lenders will often work with you on a repayment plan. Depending on your situation, they may offer loan modification. This could involve lowering your interest rate or extending your loan term to make payments more affordable. Repayment plan. Some lenders will allow you to repay the deferred amount in installments. For example, Benjamin, a homeowner in Alabama, was offered a loan modification after Hurricane Katrina. This modification reduced his monthly payment by extending the term of his mortgage, making it easier for him to get back on track financially. Conclusion. Mortgage forbearance after a natural disaster is a powerful tool for homeowners who need help during tough times. If you're affected, it's important to understand your options, act quickly, and stay in touch with your lender to navigate the process effectively. By being proactive, you can avoid the worst financial outcomes and focus on rebuilding your life and home. And remember, this video is for educational purposes only. Be sure to consult with a financial advisor for advice tailored to your specific situation. So what's the first step you'll take if you need mortgage forbearance? Share your thoughts in the comments below. If you found this information helpful, why not subscribe so you don't miss out on future tips that could help you achieve your financial goals? We think you'll find the next video on screen valuable as you continue on your financial journey. Thanks for watching, and we'll see you in the next one.